The market implied probability of a rate hike has now been priced out for the year. So if you take a look at a 6-month 10-year, we're now at 70 basis points versus just a couple months ago when we were around 75. Is this the right one?
So I think it's right that the market-based probability has come down. I think that the markets were probably too hawkish. Anyhow, every economic indicator in the UK has rolled over except for the employment data, which is, by the way, is a lagging indicator. So I think we probably just have to wait for that. I think anyone who thinks that we really do need to see significant rate hikes or more than one rate hike this year is looking at the employment data, and they're noting that, we have real wage growth in the UK now. So there has actually been wage growth in the UK in a way there hasn't really been in the US or most of the rest of the developed world. And that's just maybe, we get wage pressures. Maybe there should be fundamental pressure, upward pressure on inflation. And so maybe the Bank of England should be hawkish. But offsetting that is the growth outlook, and that remains pretty weak.
It's funny, and that seems to be pointing to his credibility, is how does he walk that loop? Andrew Sentence had a great tweet earlier. He said, another poor decision by the MPC, keeping interest rates at 50 basis points despite 9 years of economic recovery, a buoyant global economy, above target inflation, and the lowest unemployment rate in 43 years, a failure of monetary policy strategy and leadership.
Yeah, I think that's a bit unfair. A lot of the inflation has come off the back of the huge depreciation in sterling after Brexit, and that's falling out of the year-on-year comparison. So we are seeing inflation actually slow in the UK. That should continue. Offsetting that is some wage pressures, but they're not runaway wage pressures. We finally have real wage growth as opposed to a contraction in the UK. So I don't think it's something that the Bank of England needs to be worried about, needs to feel like they have to quick get in front of and hike rates about. So, the UK, when the Bank of England's stuck between, protecting their inflation mandate and also trying to protect the growth outlook, they've always erred on the side of growth. This is the rate hike that we already saw them actually diverge from that and actually support inflation, but I think probably they will err on the side of growth.